Hello, traders. It is 8:02 a.m. Chicago time on Friday, the 22nd of January, 2021. Thanks for joining me. There is no Periscope feed today. There's something wrong with their site. I know a lot of people listen over Periscope. Nothing I can do on my end. I want to remind you that derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This is episode number 1922. Let's dive right into the conversion trading pre-market summary sheet. This morning, risk off pretty well. The Euro Stoxx 50 leading the pack down 1.16%, followed by the Russell 2000. The Russell 2000 yesterday was relatively weak, and the weakness continues. There's some interesting kind of artifacts that were left by yesterday's overall auction that led us to this. In any case, you can see money flows out of indices into treasuries and the dollar. So risk off for now. The 30 years are up 21 ticks, and the 10-year notes up 5 big ticks. Today we have Yellen's nomination vote, Biden to sign pandemic food aid. At 9:45 market, manufacturing services composite PMI flash, and at 10 a.m. Eastern, existing home sales, crude oil inventories. Yeah, crude oil inventories. Interesting. So that's where we stand today. The overnight session shows currently 240,000 contracts traded, so that's pretty active. Inventory, the overnight volume inventory is 95.7% short. We're well above yesterday's range, yesterday's close. Not much traded above yesterday's close, actually, in the overnight session. And we're opening in a gap down 35.75 points of range, and we have a long liquidation profile, a B-shaped profile. And that's where we stand today. Let's take a look at what we expected yesterday versus what we got. Yesterday, the primary scenario is to drop. The expectation is to drop to 35.50. That's a 35.50. This is the stock zone, which is outlined here. 35.50 single prints. Expected it to come back in, go back to the open, and hang out on top of the point of control created on Wednesday. So open auction, dip down into the 35.50 area, bounce back up, and come back in line with the prior day's point of control in the 46 to 50 area. Here's what actually happened. There it is. What do we have? We have a market that had up, down, and it walked itself to 36.50 instead of 35.50. Missed this stock zone by 4 ticks, and then came all the way back, extended the range up, which is more than I expected. It took out the prior day's high, which was the prior day was an impulsive day, if you recall, 2 Vol Sigma day. Extended it and then just went sideways. And where did we finish? We finished right on top of the prior day's close. So yesterday's close is just a few ticks away from the prior day's close. Yesterday's point of control is just a few ticks the prior day's point of control. So what we have is a market that attempted to extend the range higher and ended up coming back and finishing exactly where the prior session has started. And so that makes this 35.50 really key for today's session. As you know, it's already pushed through. We're trading down at 38.21. Currently, the low is 38.13. So we've gone all the way through to just below this stock zone down here, and are currently trading right there at 21.50. You can see that in real time. Well, as real time as YouTube gets. So, pretty decent prediction there. 1 second. Pretty decent scenario there. Choppy trade yesterday. The only real trade that I saw that allowed for a decent setup really is this consolidation here, that the fact that we tested the stock zone, went through the mid, pullback, and we sloshed around the mid, and you could see it compressing. There was a lot trading up here, and it finally broke through. Didn't take a single trade yesterday, actually. This is just not my sort of action, and I'm okay kind of focusing on other things. There's a lot going on currently. The overnight session, so what we've done is we've made this big push right after the inauguration, and we extended this range higher overnight to 59.75, came back lower high, and that brought us into yesterday's session. Yesterday's session ended up pushing the RTH high, but not really getting anywhere. And what we have is a market that's faltering, or like I talked about yesterday, it's really moving up, but it's doing so on thin air. In other words, it's doing so on offers pulling rather than bids lifting. Those two situations mean completely different things, right? The offers being lifted by buyers. We read that as aggressors on the delta, and that means more. That means there's a hunger for those prices versus price moving up because the offers are pulling back because they think they can get higher prices. So overall, it's been moving up on pretty thin-ish air. Yesterday's extended 2 days ago extended hours session. And yesterday's trade was pretty lacking in terms of aggressor activity. The overnight session started immediately with the selling. We pushed through this 35, and we don't really look back. What we have is a long liquidation profile, a B-shaped profile here, and it's found balance down in between the 38.16. Now remember, 38.16 was last week's high, right? So if we move into and look at the daily, we can see 38.16 is right here. So what we've done overnight is we've pushed and poked through this high from last week and are holding steady. But note that we are not coming off that low. We didn't really create a V bottom. These are half-hour bars. It's had plenty of time. We did not create a V bottom and came back to attack the mid or the 35 from below. We're kind of hanging out here. And the support of this, the template day is Wednesday, and Wednesday has very little in this area in terms of a profile or any interaction. So what this is doing is it's likely to continue lower and to start moving potentially into Wednesday's gap below, which takes us down into 38.09, 38.04, and 3800 with 38.01 quarter singles. So this is the targets on the downside are very, very clear. We talked about 38.09 before. This is the high volume node that was left behind from all of the action over the last couple weeks. That was the next key area. And then below that, what was the price below that? Does anybody remember? The key price that we said if the market rolls over, that becomes the key target down below. Does anybody remember what that price is? I'll give you a minute to think about it. So that's where we stand. Pretty decent volume. Pretty decent volume. A trend profile and a trending price action. We're staying well below the VWAP, the full session VWAP mid. So I expect a fair amount of activity on the open. Okay, so that's right. The price is $27.95, 37.95, 37.94. Really important to remember where you are on the map. Really important, because that's what gives us confidence to hang on to trades, because we understand the key areas that the market is likely to move to. 37.94, 95 is very, very key. And that is a price that has received a lot of acceptance. Again, I showed you this yesterday, but 2 weeks ago, 37.95 is the most traded price in the area. What did we do last week? We piled on and put in another one on top, 37.94. And this week, we traded a whole lot on Monday at 37.95. We put in another point of control, 37.95. And so as we find sellers, the market's natural tendency is to move towards balance, is to move towards the last area of balance. And if it finds a base, then it pushes back to the most recent area of balance, which is up here at 45. We're leaving that behind. If not, then if it doesn't get support, it'll move to the next key area, which is a low volume node, and that takes us into 37.53. If it finds support, then it's likely to go back to 37.95. If it does not, it's likely to push to the next area, which is 41, and then 37.30 becomes the next key area to test below. If that doesn't hold, then we're likely to break this 36.94, then 36.81, yada 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 yada. Right? So that's the method. We move from balance to imbalance to balance, and so on and so forth. So that's that's how things are shaping up. Remember, I said that we're moving up, but it seems like aggressors are just kind of hiding. This is a buy and hold kind of environment, which sets up a nice, a strong potential for a run through to shake out the weak hands before the next leg. Okay, so yesterday's range was relatively low. Yesterday's volume was relatively low, although not incredibly low. But I think we traded somewhere around 800,000. Well, it's right here, 826,000. Contracts in the RTH, so not in terms of participation, not all that great. So let me do this 1 second. What does the order flow look like? Here it is, CT Bookmap. You can find this at ctbookmap.pro. The order flow, this is filtered to, I believe, 199. Yeah, 199. And we have a little bit of a bid below, but overall, not too much to talk about here. You can see yesterday's action has higher volume. By the way, yesterday had a lot less liquidity than the day before. The day we pushed to new all-time highs on that trend was more liquid than it was yesterday. But overall, not seeing a crazy amount of collisions or anything like that. There are no real bids or offers out here just yet. Not much to glean from that. Let's move on to our current situation. So what are we looking at in terms of today? I'm going to squish this down a fair amount because there's a lot to look at down below. Here it is. So we are right here right now. The expectation, given the overnight inventory, the expectation is an open right on top of the overnight point of control. I expect responsive buying likely to the 38.30, 38.31 area. I'm not expecting it all the way back to 35, although that would be interesting. and then I'm looking for an impulse down to challenge the low, and I'm looking for it to start moving through the gap 3809. So we have 3809. The gap mid is 04. Pay attention to that. And then the gap low is 90 something. Okay, so this gap low right here is 97. So that brings us into the 3800. And then from there, we're looking at 30. I keep saying 37.95 being the key target. So those are the key areas below. Expecting it to chop around here at the 09, chop around the 04, bounce at the zeros, and then likely to move to 37.95 before rests, and then likely drifts up. So this will be our test from above. Remember, we had a hard time closing and holding the 3800, closing above and holding the 3800 last week, and we're likely to test and bounce right back up into the close today. That's quite a bit of range. We're going into a Friday, so I'll temper my expectations a little bit, but that is the normal course of the auction if it was left on its own. With the news feed a lot quieter now, the market is likely to run under its own power, which provides for a little bit better or more predictable action. Secondary open auction presses down into the 09, consolidates at the 09, impulse back into the overnight point of control, holds steady here, and then starts the grind to close the gap. And then we would likely see ourselves back at the 3550 stock zone. 3550 stock zone here. Once we push into here, we're likely to rest, consolidate, and hold steady into the close. It might squeeze higher back into the 45, but I need to temper my expectations in terms of buying range for today. As you can hear, I'm getting a cold. It's that time of year. The air is dry. It's terribly cold here. So I'll let you go. I know I sound kind of funny, but hopefully you've done something with this week. Hopefully you've gained something this week, and just mind your risk into the weekend, and I'll catch you on Monday morning. Take care.